So good day. Today I'm going to discuss the necessary entries for the government grant under the deferred income approach and the deduction approach. So good day. So now we're going to talk about the deferred income approach. So for the deferred income approach for the year 20x1, we simply credited the machine for 3 million and cash for 3 million. It is simply 3 million because for in the statement given, the Raquel company purchased a machine costing 3 million pesos. So next is to record the receipt of the grant. So first credited 500,000 cash and grant income 500,000. Deferred grant income, since it is not yet used, but we have already received the cash. So next entry is the entry for the depreciation charges. So first is the depreciation expense credited and debited accumulated depreciation, which is 600,000. It is 600,000 simply because we divided the cost of the asset, which is 3 million pesos, to its useful years, which is 5 years, so that we get the 600,000 accumulated depreciation for the year 20x1. And last entry for the year 20x1, we debited deferred grant income 100k and grant income 100k. It is recorded to recognize the grant income. So we get the 100k simply by dividing the 500,000 received from the government grant divided by the useful years of the asset, which is 5 years, so that we get the 100,000 grant income. We credited the deferred grant income, since we already used 100,000 of the grant for the year 20x1. So for the year 20x2, we credited depreciation expense 600k and accumulated depreciation 600,000. Same for the year 20x1. We just divide the 3 million asset cost for its useful years, which is 5 years, to get the 600,000. We still use the same method, since it states there in the problem that the policy for depreciation was straight line method. So next entry is the deferred grant income. So the entry for the grant that is being used, so credited 100,000 for deferred grant income and debited 100,000 for the grant income. Same as the year 20x1, we just divide the 500k grant from the government grant to the useful life of the asset, which is 5 years, to get the 100,000. So at the end of 20x2, our balance for deferred income was only 300k, and our accumulated depreciation balance is 1.2 million. Since for the year 20x1 and year 20x2 lang yung count natin. So for the year 20x3, so we just recorded here the removal of the remaining balance of the deferred grant income. So we credited grant income and debited the deferred grant income. So the 300,000, this is the remaining balance of our deferred grant income. So and the last entry is the grant income and the cash. So the 200,000, we get this from deducting the 300,000 balance from the 500,000 government grant that we received. So we debited cash since we already used the 200,000 worth of cash from the grant, from the government grant. So for the last three entries for the deduction approach, so for the year 20x1, we simply record credit machine for 3 million and cash for 3 million. It is simply to record the acquisition of the machine by the Raquel company, which is worth 3 million, costing 3 million. And for the next entry, we credit cash 500k and debit the machine for 500. It is simply to record the grant reduction of the machine. So so after this deduction of the grant of the machine cost, our balance for the asset left only 2.5 million since we deduct 500k to the 3 million. So next entry is the depreciation expense, to record the annual depreciation. So we simply credit the depreciation expense 500k and accumulated depreciation 500k. Simply divide the 2.5 million balance for the asset to its useful life, which is 5 years, to get the 500,000 depreciation. So for the year 20x2, we just simply record the depreciation for the year. Since it is only applicable, it is only the required entry for the year 20x2. So for the year 20x2, we just simply credit the depreciation expense 500k and accumulated depreciation 500k. Also, we just used the same method for the year 20x1, which is 2.5 million divided by 5 years to get the 500k. We just use the same method simply because it is said here that only the policy of the depreciation of the asset is on the straight line basis. So lastly, for the year 20x3, the machine was costing 500,000 and cash debit 500,000. It is simply to record the repayment of the grant to the machine. So we just simply record the repayment, our repayment to the machine cost. And next is the depreciation expense, to record the additional depreciation due to the repayment. So the depreciation expense credit and accumulated depreciation debit. So it is simply to also to get the 200,000, we just simply deduct the accumulated depreciation, which is 1.2 m to 1 million, to get the 200,000 additional depreciation. And last entry was to record the annual depreciation for the year 20x3. So credit depreciation expense and debit accumulated depreciation. It's simply to record the annual depreciation. To get the 600k, we just simply divide the 1.8 million to the 3 years. So the 3 years is the useful life na naiwan ng asset. So it equal 1.8 million divided by 3 is 3 years is equal to 600,000. That is why we get 600,000 accumulated depreciation expense for the year 20x3.